Today might be the most important Bitcoin update I've ever recorded for this channel. I've missed something about Bitcoin. I'll admit I have not been bullish enough. It has to do with Bitcoin and its interaction with the fundamental creation of money. Welcome back to the Bitcoin Layer. I'm Nick Bhatia. Today is Friday, December 6th. Bitcoin is over $102,000. The block height here is 873,548. All right, here's my agenda for this video. We're going to go through some candles. I want to look at the price action on Bitcoin rates and the dollar. Then we are going to talk about Bitcoin and my big revelation about Bitcoin's price, where the asset class is, and how it is going to be monetized over the coming years. Then we are going to talk about the US economy and global rates, think about what the Fed is going to do, and have an outlook on 2025. Let's start here with Bitcoin daily candles. The yellow line is the top end of the consolidation range from 2024. We flagged the breakout around 73,000. That 73 would trigger a move to 96. That move happened quickly. Then we saw a little bit of a consolidation right under 100,000. That broke over the last 48 hours. We're now at $102,000 as of this recording. Now, alone, the price action in just today's candle is, frankly, it's insanely bullish. Bitcoin is heading much higher. Our now base case estimate is 150,000. That's basically a double of the top end of the range that we were in 2024. 150,000 now isn't really that far away when you think about Bitcoin not having any technical resistance. So Bitcoin, when it doesn't have technical resistance, can advance very quickly. And a move to 150,000 within some relatively short time frame is now basically our base case here at the Bitcoin Layer. Make sure you're subscribed to the Bitcoin Layer's free research publication at thebitcoinlayer.com/subscribe. Consider becoming a pro. Pros got our short and long-term price predictions last week. So make sure you're subscribed to the Bitcoin Layer's research publication. Now, the green line here was a resistance. It was a short-term resistance here, just based off of some 4-hour candles. You see here zoomed out that on the daily candle time frame, the green line doesn't carry a lot of relevance. And honestly, we don't give it a lot of relevance. It was something that I just zoomed in, trying to measure where this breakout is going and trying to time the momentum of it. So you see the candle from yesterday, this enormous range. You had a huge leveraged wipeout yesterday in the midst of a bunch of basically bullish bets coming into the market to try to chase. These are momentum chasers. They get wiped out quickly by algorithms that we call seek and destroy. These are algorithms that go out and seek stop losses, and they destroy the stop losses by overwhelming the exchanges with the appropriate amount of volume to go and trigger those stop losses and get those traders' positions out of the market. It's basically free money for traders that have more money than the retail players that put stop losses in. One more thing I want to point out on this chart, you look at the bottom pane here, the RSI, this is a momentum indicator. Bitcoin on the daily and on the weekly, it's not that stretched right now. And I have an on-chain chart for you in a little bit as well. It's just not that stretched right now. It could easily get stretched in a couple weeks at 150. Then it can look really hot on a few different technical indicators, but it just doesn't look stretched to me right now. So Bitcoin is here to play. We're probably headed a lot higher before we get any sort of toppy price action. The toppy price action to me would send Bitcoin back down to 100. So what's the level it gets at before it has this big draw down to 100. I think a good base case in the short term would be 125 to 100, and then in the more medium term 150 to 100. So this 100 to 150 range is now Bitcoin's new price range. I know we're at the bottom of it, but that really should be the new framework. Bitcoin is going to start trading $25,000 at a time on its way to $1 million now. The $1 million call is something that I'll get into as we go. It's no longer tongue-in-cheek. It's not something that we should be flippant about. The new, most of you guys are holders here. So what are you looking for? You're looking to understand what Bitcoin is going to do over the next several years. Is it going to 150,000 or is it going to 1.5 million? That's the question that you're probably most curious about. And for me personally, I'm seeing Bitcoin with a lot more clarity. Again, I'm going to get into my exact thesis here in a little bit, but Bitcoin is headed much higher. It should be thought of as $25,000, $50,000, $100,000 moves at a time now. We're in a new era for Bitcoin here above six figures. So now we're playing between 6 and 7 figures. So 100,000 to $1 million is really the mental range here as we've entered the next set of circumstances for this asset class. Bitcoin is hitting its stride with massive ETF inflows, large geopolitical changes, and the prospect of a United States strategic Bitcoin reserve. 2025 is shaping up to be a defining year for Bitcoin. And here's the real question that you guys need to be asking yourself. Are you prepared? And is your Bitcoin house in order? If you're not sure, you're in luck, because on December 10th, Unchained is hosting a free web event that is an essential session to prepare yourselves for what is ahead. You'll walk away with a clear plan for your end-of-year moves, smart strategies for bringing your family into Bitcoin, and the confidence of knowing that you are set up for the long haul. Join Unchained's General Counsel Jeff Vandrew and Adamant Capital founder Tour de Meester for an unbelievable session to get you guys positioned for the year end, all your tax strategies, retirement strategies, any question that you might have about Bitcoin planning. With the bull run gaining momentum, this is your window to prepare for what's ahead. Register at unchained.com/TBL for this free web event. Don't risk your Bitcoin security. Do you have Bitcoin private keys stored on paper? Make sure you convert those keys to titanium with Stampseed. Stampseed has this really cool DIY kit that allows you to hammer in your seed phrase into these small titanium plates that are fire resistant and damage resistant. This kit is designed by titanium metal workers that have been working in stamping metal for over 14 years, and your words are deeply stamped, not just a shallow dot. So make sure you check out stampseed.com today and use code TBL for 15% off of your order. Okay, one final technical note here on the Bitcoin price. I think that 100,000 is now a very, very important number on the support side. So I know that we've just crossed above 100. Basically, if Bitcoin can't hold above 100, it might come back down into the 70s. That's the technical reading here. But I really look at this high 90s to 100 level as a very important technical level for Bitcoin to hold, because it's all behavior. So what is the behavior of the new entrants in the market? Are they willing to defend 100,000? And I think that is material. It's important. And I expect Bitcoin to hold 100,000, then that sets up the move to 200,000. And so it's basically the most important number now. It's the only number that matters, if we're going to be very honest, because I look at technical analysis as a behavioral study. And so there's nothing more behavioral than six-figure Bitcoin. We've been talking about it for a year at this channel, at the Bitcoin Layer. We hope you've been around. We hope you got your Bitcoin 100K hats ready. And now you have to establish support at 6 figures. If and when you do, you set the move up to 200, right? And so that's basically what we need to watch for over the next few months here in Bitcoin. If Bitcoin gets off to the races, then you don't test the 100,000 until maybe way later. All right, to the next chart, we're getting into US Treasury yields here. We're looking at the 10-year. These are daily candles. This is a little zoomed in for us, but I wanted to show you. The yellow line is this declining resistance level. The blue horizontal line here is 4 1/3. That's a level that we flagged. Tens traded above both of these levels here on the election results and the trade into the election. It's come off. We've had buying in US Treasuries. This is something that we are watching closely and we're studying. Now, I wrote a piece this week called "The World is Changing." And the reason that I wrote this note is because I believe we are in a new set of circumstances for the global macro economy, for US markets, for the dollar, for US Treasuries, and for US stocks. None of this actually has anything to do with Bitcoin, this thesis. My Bitcoin revelation is separate from this world is changing thesis. The world is changing thesis is based off of the election results and what I expect to come as policy from that and the ramifications for the economy itself, which is private enterprise, mostly in the United States. But it does have implications for the rest of the world. Before I get into the specifics of my world is changing thesis, I want to mention 2 names here that are part of my research docket right now. So at times like these, I really look to people that have been around and have more experience than I do, because I don't have experience of multiple cycles. I've been a markets watcher and a trader since 2010, and I've been an active participant in the institutional market since 2014. So formally on the desk since 2014. That is only a decade of experience where many people have multiple times of that experience. So it is times like these when I look to others, but I don't like it noisy. And so I really have to filter it down. The 2 people that I have turned toward at this moment are Michael Howell and Russell Napier. Russell Napier is a financial historian. I've tried to get him on the show, I promise you, and Russell has been cordial, but I haven't been able to get him for an interview. Michael Howell, who you guys know, we've had him on multiple times, and I just had him on this week. So I've gone back and watched my own episode with Michael because his words are so important, and I'm trying to read everything that he's writing and listen to the things that he's saying to help me understand how to interpret what's coming. So in my analysis, you might hear some of Howell and some of Napier. The Russell Napier article and interview I'm citing here, the journal article, it's in American Affairs. It's called America, China, and the Death of the International Monetary Non-System. The interview is on hidden forces. These two financial historians, and they're both in private practice. They both consult to institutional clients. Both of these financial historians are people that I'm leaning on for information. Now, I can tell you for both Howell and Napier, there are parts of their thesis that I'm skeptical of or I don't agree. So I'm going to fold in some of their analysis, but I promise you the analysis is my own. I will cite specific things that these guys are talking about as well in my video today. Now, what are my thoughts on Treasury yields technically? Well, the rejection of the yellow line is important. It means that there's a modest bull bias still in play here in Treasury space, but We're in a seasonal pattern where treasuries get bid toward the end of the year. I basically think that treasuries are in a fair value zone right around 4%. So I don't think that there's a ton of bias one way or the other on treasuries. And that's actually important for overall liquidity, because if there isn't a worry about rapidly rising treasury yields, then we can assume some muted bond volatility, which is supportive for overall asset side liquidity. These interwoven relationships between bonds and liquidity and the risk markets are all things we cover at the Bitcoin layer at our research publication. Our flagship product is a beautiful 20+ page PDF report. It's called Mean Median Mode. We give you every single number that you need to know across Bitcoin and global macro. Okay, I want to look at the euro versus the dollar. Euro has had a tough 2024 as the dollar has strengthened, but there are political troubles in Europe. We're going to watch to see this currency pair, China versus the United States, Europe versus the United States. These currency relationships might be evolving quickly as we get into Trump 2.0. So our eyes are on it. We don't have a ton of analysis right here because the price action isn't telling us that we've just entered some mega trend. Broad dollar has strengthened. It's taking a break here. And so we're watching the dollar very closely. I just wanted to convey that to you guys as we get here into 2025. Also, Michael Howell in his episode earlier this week covered his outlook on the dollar and how Trump 2.0 is basically positioned bullish for the dollar. The outlook is positive for the dollar because a strong dollar will taper inflation. It will get inflation down, which Howell says is politically one of the most important things to the new administration. So we think that that thesis is valid. We're going to watch it play out. Okay, I have here a chart, Bitcoin's on-chain analysis. Our favorite metric here is MVRV. It's the ratio between market price and realized price. Realized price here in blue and the MVRV in green. And so what do we see here in MVRV? It's not even close to the 4 level where we were in 2021's bull market. So Bitcoin, it's not that overheated. We look at this on a normalized basis as well, which is on a Z-score. It's just not that overheated yet based off of this historical relative valuation. Again, if you want to get more under the hood with these numbers, the best place to do that is Mean Median Mode, our flagship quantitative report. Now, this week, Bitcoin finally went above $100,000. It had some pretty dramatic price action over the last couple days as a lot of leverage positions got chopped up. Bitcoin trades as of this recording above 100,000, as of this chart slightly below. I want to show you though that Bitcoin really, it's not a linear path for this asset. This chart here in linear form is how Bitcoin got to 6 figures. But on this next chart, which I changed the scale to logarithmic, you can see how Bitcoin is going to 7 figures. So the path to 7 figures or $1 million Bitcoin over the next several years, that path is dependent on something that I haven't seen very clearly until just this week. So here's what I've previously said. For many, many years, this is the way that I've framed the path for Bitcoin to get to 6 and 7 figures. My whole thesis has been the size of the financial system, including equities, fixed income, and you can even count real estate, investable real estate in that mix. That pocket of assets is in the several hundred trillions. Now, we know publicly it's at least 200 trillion, but this number could be anywhere between 2 and 600 trillion, depending on a lot of studies that are out there. There's a McKinsey study about the global balance sheet. There are a lot of studies that would put this number, let's just say around $250 billion, which is 500 trillion. The chart that we've used at the Bitcoin layer is Bitcoin as a percentage of global equities in the 1 to 2% range. That's just using about 100 trillion in global equities that we've aggregated across several of our indices that we track here at the Bitcoin layer. So Bitcoin relative to these other asset classes, I've always thought or said that as money is invested in Bitcoin, it will rotate out of these other asset classes. Basically, you have this grand rotation, and that you have all this money in bonds and all this money in stocks and all this money in real estate, and people will sell some apartments and they'll sell some stocks and they'll sell some fixed income and they'll buy Bitcoin. And Bitcoin will grow in relation to these other asset classes as people sell and buy Bitcoin. As people sell stocks and buy Bitcoin, or they sell land and buy Bitcoin. They sell a building and they buy Bitcoin. I can tell you now that I've thought about this, and I can't, it's hard to explain that I now think that this is an idiotic way to think about the future of Bitcoin and how it's going to evolve. I'm actually astounded that up until now, this grand rotation, this big movement out of one into the other is what I thought, or what I based a lot of my thesis on. But now I see that behind that, there was this collateral thesis that is much more important. So I want to unlock that now. I want to talk about my big revelation about Bitcoin's price and where the next several years of Bitcoin's appreciation are going to come from. Now, if you've been with us this year, you've seen me in student mode trying to understand how money is created. I've had a very intense intellectual interest in money creation really since 2010, and when I got my first understanding of quantitative easing. That's a story that I've told on this channel earlier this year. But the understanding of how money is created has evolved, and this year you've seen me interview several people to try to unpack that. Michael Howell, Andy Constant being two of those people. Now, in this pursuit of money creation understanding, I have grown to appreciate the role of commercial banks in money creation and how commercial banks team up with the government to bring a lot of new money into the system. That part about borrow and spend from the Treasury perspective and using banks, that is going to play out a lot in 2025. I think that's going to have a massive impact. So you'll be seeing me write and speak about that quite a bit next year. But about Bitcoin and money creation, I now see something that I wasn't seeing before, which is that the future of Bitcoin demand, the next set of Bitcoin buys. So let's just say that up until now, a rotation is a viable thesis for how Bitcoin got to six figures. But it's not going to explain how it gets to 7. Because when you bought Bitcoin, you probably had that cash in a money market fund or in deposit, or you maybe sold some stocks or sold some piece of property to buy Bitcoin. So that was a rotation. But going forward, where will the Bitcoin buys come from? We basically need to think about MicroStrategy and other companies that are issuing bonds to buy Bitcoin. Now, is it a rotation when MicroStrategy buys Bitcoin with new share issuance or new bond issuance. And it frankly doesn't matter which type of corporate instrument MicroStrategy issues from the liability side. It is creating those new liabilities from nowhere, right? When it issues new shares or it issues new liabilities, meaning it issues a new bond, it is creating new money. It's creating new financial instruments. Those instruments aren't money. MicroStrategy shares and debt is not money. They're financial assets. But where does the money come from to buy the new MicroStrategy bonds and shares? Did somebody sell their Apple equity to buy the new MicroStrategy equity, or sell their Treasury bonds to buy the MicroStrategy bonds? Was it a great rotation? The answer is no. And this is what I want to communicate to you guys today. While the answer is yes for part of it, the answer is no for a lot of it. And it doesn't matter the percentage. That we can study as we go forth. But the point is that a lot of that money comes from where? New credit creation from banks or money brokers that are in a daisy chain of liabilities that eventually tie back to new money created by banks. New financial liabilities that trade in a money-like circumstance, like repo, by financial institutions. So basically, the answer is new money. How did Bitcoin get, so let's summarize. How did Bitcoin get to 6 figures? Existing money, rotating. How will it get to 7 figures? New money. Let me give you an example from real estate. This is how I wanted to explain it to you guys today. You've heard the term real estate, you've heard the term housing is the engine of the US economy. If you've studied the economy or if you're an investor, you know this. They say that housing is the engine for the US economy, or that construction is an engine for the global economy. What does that mean? The economy grows because of credit creation and productivity, right? But new money, meaning credit creation, is an enormous part of how this economy, global economy, functions. So, and by the way, this whole Bitcoin replaces the dollar. No, this certifies how long the two are going to coexist, because Bitcoin actually depends on this dollar credit creation system to keep going, to keep growing, actually, because it gets monetized. I'll explain how it gets monetized. So let's focus on the example of U.S. housing is the engine of the U.S. economy. If there is a builder who wants to build a house, the builder wants to build a house to sell the house, right? And it's an investment for the builder. So the builder buys a plot of land. And when the builder buys a plot of land, let's say that piece of land belongs to a real estate trust and it's never traded hands for basically forever. So the original owner acquired and subdivided and holds a bunch of plots, and a new real estate investor wants to go and buy one of those subplots. So when that builder buys the plot, the builder borrows money from a bank. The bank creates new money. The builder has some down payment. The bank creates new money, lends it to the builder. The builder now has a new note. That's new money. The deposit is new money. So the builder takes the deposit and goes and spends it on building materials, spends it into the economy. So spends it on stuff, builds the house. Now, the builder puts the house on the market. A family comes to the house and buys the house, goes to the bank, borrows the money. The bank looks at the family and lends new money. Now the builder goes to the bank and says, hey, I have the money to pay back. But the bank says, no, go buy another plot of land with it. We'll finance that. We'll roll it into a new loan so that the original bank doesn't have to contract its balance sheet. And so that's how new money stays in the system. So when they say that housing is an engine, it means that it assists in the creation of credit, the creation of new money at more than one stage in the process. Think of the family that goes to the furniture store and finances a bunch of furniture. The furniture store has an agreement with a bank that lends new money into the system to create that new loan. This is the daisy chain of credit creation that the whole economy depends on. So what I'm saying is that the old holders of Bitcoin that come to market and say, hey, I have $100 million worth of Bitcoin to monetize. And they go to, let's say they go to a private market and a private broker. My point is that the $100 million buy, which is, it's going to happen in the market, that money is coming, it's going to come from new money. So think about IBIT. Now let's go back into reality. What's IBIT? What's FBTC? These are two of the largest ETFs of all time already. It's incredible to think about, but they are. They've had the most successful launches in ETF history. Bitcoin ETFs were the success story that we've been forecasting. Honestly, I wrote this article in 2018, The Business of Bitcoin Cold Storage, speculating about the future of ETFs and the war over Bitcoin custody. This is institutional capital that's coming in. But yes, some pension funds are rotating out of some assets and some shares into Bitcoin, but IBIT is getting financed in the margin markets. And through the daisy chain of balance sheets, this is, I guarantee you, coming from new credit creation, brand new money, intra-month money. When we think about window dressing and the repo balances that spike at the end of the month, what does that even mean? What does window dressing mean? It means that banks finance all of this activity in the middle of the month, and then at the end of the month, they have to collapse a lot of it to make their balance sheet look pretty. But in the end, the system always grows because credit is always expanding. Because if banks don't issue new loans, they don't make money. Banks are houses, they're inventory houses for loans. That's the only way they make money is if they lend. And so if they don't grow their asset base, they can't grow their income. And their only assets are loans. So Bitcoin's 7-figure path is monetized via credit creation, not a rotation. That is the revelation. And why am I saying that now? It's something that I missed but I had the collateral thesis. The collateral thesis is that Bitcoin is pristine collateral and that you could borrow against it. But it's actually the opposite. That's the opposite way to think about this relationship. It's that Bitcoin is collateral, so you can borrow and create new dollars to buy it. That's the new thesis now. Bitcoin grows because you can create new dollars to buy it. Any bank will now lend you new dollars to get involved in Bitcoin from the long side. As long as part of your asset side is IBIT, is MicroStrategy debt, is Bitcoin itself, the bank will lend you money. Now, how much of this thesis should you take explicitly and how much is happening via channels and how much is reserved for institutions and whatnot? Well, from the retail perspective, it might not be the case that you can just go to the bank and show your cold storage wallet balance and get a loan against it, which would be new money. But we are incredibly close to relationships and financial institutions that can do exactly that. Unchained is there for you to do exactly that. Now, from an institutional side, the credit creation to buy MicroStrategy shares, that is the reality now. So the players, the broker dealers are lending money to allow people to buy new shares and to buy new debt. That gets financed through the daisy chain of financial balance sheets, and that is new credit creation that's coming into the market. So what does MicroStrategy do? They issue equity, they buy Bitcoin. The equity that they issue is financed from new money. It's new dollars to finance Bitcoin purchases. An asset manager goes to their broker dealer and say, we want to buy 100 million of IBIT. What's the borrow? That's what they ask. They actually say, what is the borrow? What is the rate? What will you charge me? Not, will you lend me money? Oh, please, will you lend me money? No, the money is assumed. What is the borrow? The borrow is 5. I'm just putting a number on it. The borrow is 6%. Done. Borrow at 6. Finance the IBIT. How much do you need down? Really, it's not much. Okay, it's pennies on the dollar. As long as they have it in a margin account somewhere, it's good. You're good to go. You can finance it. What about selling now and selling and buying options? Finance it. What's the borrow? Just write it for me. This is Bitcoin's future. It's going to get wild. And the rotation thesis is dead. That's what I realized. And I wrote my world is changing piece on, I think I wrote it on Monday night. And I didn't even include it in there because I hadn't circled it really until the 100 level kicked in and I realized what was next. Also, the speculative attack thesis now renewed and has always been brilliant, but you borrow the worst you borrow the worst currency to buy the best. That has always been the case. That is the way to basically take advantage of cross-currency relationships. And the borrow is the creation, and that is now starting to play out. It's not existing money anymore. But yes, in the interest of not getting overly hyped, we will focus in terms of Bitcoin's price as independent researchers. We don't offer financial advice. We give you our opinion based on our own research and analysis. Bitcoin, we do assume that it will get to an overheated level at some point here in the next 12 or so months. And that's our base case expectation as well. And we'll just be here watching all the metrics, one of them being the MVRV and its Z-score that we mentioned earlier, as well as Bitcoin's price action itself to see, is it going slow and steady, or is it getting technically overbought? These are all things that we'll continue to watch on Bitcoin's path. And in terms of when does Bitcoin get to 7 figures and when does it get to $1 million, we don't know. And there's no reason for us to try to speculate on the timing there at all. I do want to explain, though, that when Bitcoin goes from 2 trillion to 4 trillion to 8 trillion to 16 trillion, and it will, it's going to grow not because someone sells a bunch of buildings and buys Bitcoin with it. It'll all get monetized along the way. And so Bitcoin can grow much, much larger than just as a percentage of these other asset classes. It can join them. It can join them at 100 trillion. And that's not something it's not something I had really fully thought through when thinking about where Bitcoin can grow. And I know some of you longtime holders out there will laugh at me and say that, the million is not bullish enough. And I salute all of you guys out there, because when you do think about the size of the world's financial system at 500 trillion or 1 quadrillion, then Bitcoin reaching some of these levels, the famous Pierre Richard quip that Bitcoin would be at $1 trillion per Bitcoin, those types of levels are fun to speculate about. But when we think about Bitcoin at $1 million, which is at $20 trillion as an asset class, it just isn't that large anymore. And that's really the message, is when we think about Bitcoin relative to other asset classes, the 1 trillion or 20 trillion, they cannot be thought of as far-fetched, especially when you think about real estate and how real estate gets monetized. If Bitcoin is a pristine collateral, it can get monetized just year after year. It doesn't have to come from somewhere else. And that's a new revelation for me and will be in my framework now forever. Now, switching gears to the US economy and the money markets, the Fed will be meeting later this month in December. The expectations are that they'll cut another 25 basis points. Why is the Fed doing this? Well, the Fed does believe that unemployment rate is a challenge for them and that they have a grip on inflation. Really, right now, the Fed is on hold until the new administration, we believe. So they've set a path for themselves. I know they say that they're not on a set path, but they have said consistently, we want to get closer to neutral, which they claim is somewhere around 3 to 4. So they're going to get to 3 to 4, and they're between 4 and 5. So they got to cut a couple more times. It's really simple, nothing to get too analytical about. The Fed is pretty clear when it wants to forecast these things. That's why we told you that the Fed would be cutting earlier this year. They forecasted it, and they've already boxed themselves into a few cuts here, so that's what they're going to do. Once we get into January, new policies, new administration, we'll have to see what the path is for the budget, the Treasury's issuance of bills versus coupons. One of Michael Howell's theses is that the 10-year yield is really 1% higher than it is on the chart because the Treasury, has issued so many bills and hasn't termed out the issuance. That's been a Yellen policy that will be continued by the new administration, because the new administration realizes that if they issue a bunch of 10s and 30s, that the curve will steepen out. That will cause bond volatility. That will hit the stock market. Trump loves the stock market, and the Treasury and the administration understands that if it issues long, it will have trouble with stocks. On its face value, we buy that thesis that Trump loves stocks and wants to keep them elevated and now has the yield curve as a toolkit. And even though it might not like what Yellen did because it was non-market based, or it wasn't based off of what the trends had been, or they manipulated the yield curve one way or the other, we appreciate the thesis that they might want to continue this and issue a bunch of bills. That will also help liquidity from the pure creation of money perspective, because banks like bills, they don't like bonds. Bills fit their asset liability management better. And so the financial system could expand if we get a bunch of bills. These are all liquidity, TBL liquidity, positive things. TBL liquidity is our new metric that we're tracking every couple weeks in mean median mode. So go to thebitcoinlayer.com/subscribe and become a TBL Pro to gain access to our incredible mean median mode biweekly report. One big thesis that we took away from Howell was that a strong dollar keeps a lid on commodities. It keeps a lid on global inflation. and that will help Trump stay in office and win in his midterms in 2026. This is a valid thesis that we have to take at face value. We'll watch it play out because it's not exactly clear to us if tariffs will have a deflationary or an inflationary impulse. So we're watching tariffs. Will it bring a duplicate supply chain that will allow prices to come down? Or will it increase prices as the duplicate supply chain is years away, so there's a shortage and prices go up? We don't know. We're going to watch to see the impact of that. But what we do know is that Besson is a markets guy, so he understands cross-asset correlations, one of the things that we watch more closely than everything. So inflation, if inflation goes down when the dollar goes up, keeping the dollar up is going to be a good thing. I have a crude oil chart here in a little bit for you, but this relationship here is between the crude exports of the United States and the strong dollar. Crude being produced in the United States, this is a trend that we are likely to see continue under Trump 2.0, a pro-industry policy, pro-energy policy, pro-oil. And so oil in the United States means we don't have to sell dollars to buy another currency. It means that we're not having to buy or import oil. And so if we're not importing, it keeps the dollar strong. And that is something that we're watching. If you go to the next chart here, you can see oil is not bid. And if oil comes down, that is a way to get inflation to stay down. We are not necessarily in this grand inflationary environment right now if we have a strong dollar. A strong dollar can really keep a cap on inflation. Now, we know domestic wages are strong. The labor market is still relatively tight and might even be strengthening here. Consumer confidence might be bottoming. There are a lot of signs in the U.S. economy that we don't have a bunch of deflationary forces. But if we don't have oil prices going up, that can be one source of deflation. Now, that also assumes that Trump is really thinking about the way that Biden got toppled and maybe even the French government came down because of inflation. The people are voting with their wallets. That's what we're seeing. And so if inflation is the number one thing getting politicians kicked out, is that going to be the number one policy motivation of incoming governments? And what are they going to do to accomplish that? We'll see if the strong dollar thesis plays out. This is a chart of just the dollar by itself. Looking over the last 15 years, you see a leg up in 2014. You see a leg up in 2021, 2022. Do we see another leg up here over the next few years in the dollar? Something that we definitely have to watch and could impact global markets. The last quick chart is crude on the candles here. You see that there's a lot of weakness in the crude price. It means that either the global economy is weak or the dollar is strong. Those are the main two takeaways here for crude price action always. And right now, I would suggest that the dollar, a strong dollar, is in charge. Also, weak Chinese demand could be something that is at play. Also, China not buying directly from the global crude markets because of relationships with Russia and Iran. These are all global geopolitical factors that we're watching. There are analysts that we're looking to for their geopolitical analysis. So there's just a ton to research heading into 2025. We're excited for it. We appreciate you and your viewership, listenership, and readership. Make sure that you're subscribed to the channel. If you're an audio person, please rate and review on your favorite audio platform. Catch us at thebitcoinlayer.com/subscribe, and we'll catch you guys next time.